Special coverage from the New Orleans Investment Conference is brought to you by First Majestic Silver Corp. There's no substitute for silver. Hello and welcome back to New Orleans. Welcome back to Soar Financially. My name's Kai Hoffman. I'm the EdJR mining guy over on X. And of course, you're a host of this channel. And I'm looking forward to bringing back Chris Powell. He's with GATA, Gold Antitrust Association. And I think you're the treasurer.
Secretary and Treasurer.
There he is. Yeah, exactly. So, Chris, it's great to have you back on the program. It's good to see you. Exciting times. We're at $4,000 gold. Really looking forward to catching up with you because we're always, at least once a year, we manage to do this here in New Orleans. What's been keeping you busy?
Well, the gold cartel, as our chairman Bill Murphy calls it, central banks and their investment bank agents, they're having a harder time of price control, but they aren't going away. We had just when we were starting to think that the monetary metals were breaking free. A couple of weeks ago, we had some nice smash downs that seemed to be largely the product of derivatives and futures trading in London and New York. I don't think 500 million Chinese got up in the middle of the night and decided to sell. So they're still around, and I just think they're losing because of the heavy physical demand that has developed over the last couple of years, particularly by central banks. The gold price suppression policy of the United States and its allies has been based on derivatives, selling gold that doesn't really exist, selling claims on gold that isn't available, and that short position has been called in the last couple of years, and I think that explains why the price has risen so dramatically. Is because the metal is not there to cover the derivatives that have been issued against it.
No. Now, as you said, the cartel has been broken, or at least we're very close to breaking them. It's always interesting. It happens at 8 a.m. my time, usually in the mornings. That and we call him Mr. Slammy. Mr. Slammy shows up, and as you see, it's almost like a waterfall chart. Every day at 8 a.m. you can see a price dropping gold before it starts to come back up. Explain that price action to us a little bit. Why is it exactly at that time, and what does it tell you?
Well, it's the time is when London opens, and London is really the headquarters of the Bank of England and the Bank for National Settlements trades in London. And that's really where most of the derivative trading takes place. Listen, I think for at least 20 years now, the trend in daily gold price trading has been to rise during the Asian market hours and to fall back dramatically during the Western hours. The West has been selling mostly derivatives. The East has been buying mostly real metal. And I think somebody did a survey something like 15 years ago and found that if you bought at the Asian Open and sold at the Asian close, and then bought again, you'd always make money. Now that can happen only if there's some policy in effect that says you can't let gold go up over in these trading hours, but nobody can control it in the other trading hours. It's a long pattern that's been going on where gold is moving from west to east.
How do people make money on this? Like, just very pragmatically speaking, if you slam the price down every morning at 8 a.m., like, when do you cover? At that point, do you earn money on the short side? It seems a very simple question to ask, but it seems like somebody's always short.
They cover by scaring people out in the short term, and once they've scared people into selling their futures contracts, they buy them back cheaper than when they sold them. This has been going on for many years. Yeah. It's an emotional thing with the ordinary retail investors, if you want to call people who buy futures contracts investors. They are smaller traders. They're not as financially backed as the investment banks and the central banks, obviously, and so they can be pushed around a lot easier. They don't have the cushion to stay the fight for weeks at a time.
Has the role of gold changed over the last 12 months? Meaning like the use of it, it seems like the perception of gold is changing, banks are changing their tune towards gold. Is the role changing at all?
Well, I think in the long term, gold is the once and future money. People, and particularly governments, have seen that the U.S. government can't really be relied upon as a custodian of financial assets. The Russians learned that hard lesson a couple of years ago. That has put trust in the U.S. government in question. Governments have repatriated gold from the Federal Reserve in a gradual way for the last few years. The Russian incident has shown them that you can't rely on the U.S. to be custodian of your assets unless you're going to take orders from the United States in foreign policy. I think governments and central banks have realized that your foreign exchange reserves are safe only when they are in your own hands, in your own vaults, in your own country. And that, I think, is building a consensus that gold is still pretty good money. And insofar as it is money without counterparty risk, it's the best money.
If you had to make a guess, like how much gold does China own? And what will happen if China actually starts to reveal the official, the real numbers that we all suspect but don't know?
Well, we have been pointing out for years that official gold data is useless. The secret March 1999 report of the staff of the International Monetary Fund was very explicit, saying the IMF was going to refuse to let central banks distinguish their gold in the vault from their gold out on loan, because if the markets knew how much central bank gold was leased or swapped into the market, then the market would know just how able central banks would be to continue to intervene against the gold price. So the secret March 1999 report of the IMF staff admitted that the official gold reserve reports are fraudulent. They don't distinguish the leased gold from the unencumbered gold. Saudi Arabia was caught, I think, 10 years ago not reporting gold reserves to the IMF in its full complement. China is estimated, well, I guess China has said it's got something like 3,000 tons or thereabouts official reserves in the account of the People's Bank of China, but the import data suggests China's gotten far more gold than that in the last decade. They're, reasonable experts have estimated that the real Chinese government gold reserves are in the tens of thousands of tons. Certainly that insofar as China now is offering to vault sovereign gold reserves and is trying to internationalize the renminbi, gold is very useful to them in that, and they probably have something like 40, 50, 60,000 tons, and with that amount of gold, they can remonetize gold around the world, which I think is their plan, because nobody's going to trust the currency issued by a totalitarian government. But you can test the gold that you take from a totalitarian government, and you can see that money's going to be pretty good. I think gold is the financial mechanism that China is going to use as a counterbalance against the United States.
What will be the ripple effects? Let's assume China announces that the renminbi is going to be fully or even partially gold backed. What do you think the ripple effects will be on the financial system?
Well, it would tend to strengthen the Chinese currency and weaken any currencies that are not tied to gold. Now, I don't know exactly how China would so-called, how China would have so-called backing for gold. Would it be a fixed exchange rate? Would it be a floating rate? I don't know, but look, the Reserve Bank of Australia used to put in its annual report a very candid explanation as to why central banks hold gold reserves. The Reserve Bank of Australia said in its annual reports that gold is held for currency intervention. And I don't think anything about that has changed. If China is acquiring more and more gold, it's for currency intervention. If the United States, anybody else is acquiring it, it's for currency intervention. If the United States still has 8,133 tons of gold unencumbered, it keeps that gold for currency intervention. That's, I think, what gold investors got to understand, that the gold is both the playground and battlefield of central banks. You can't examine gold at all without understanding that it is a central bank weapon.
No, it can definitely be used that way. And I'm really curious, there are rumors floating around that the US is currently the buyer actually of gold to replenish what might be missing in Fort Knox. What do you say when you hear that rumor? What are your thoughts?
Well, Brian London, the organizer of this conference and the editor of Gold Newsletter, published that speculation in Gold Newsletter a few weeks ago, and I thought it was immensely plausible. And Brian noted that this was really the suggestion of the disappearance of President Trump's interest in auditing the gold reserves at Fort Knox. I mean, back in February and thereabouts, we had weeks of this sensation. He and Elon Musk wanted to audit the gold reserves at Fort Knox, and Trump said he'd be very upset if the gold wasn't there. And then suddenly there was no audit, but they just stopped talking about it. And Brian and others began to suspect that somebody, an adult in the room, possibly Treasury Secretary Scott Bessent, took the president and Elon Musk aside and said, listen, you ought to really knock off this Fort Knox audit business until we can get our gold reserves back in unencumbered shape. And I think that's a very plausible explanation for some of the great physical demand in gold that has manifested itself in recent months. It's very possible the United States is putting some gold back where it was supposed to have been all along before we try any audits.
But wouldn't that show up in like export-import statistics? Like Trump was trying to put tariffs on Switzerland back in April as well, or March, April, because the gold imports into the US spiked and were causing a massive deficit because of it.
Official monetary gold is exempt from tariff report, from import reporting in certain countries. I don't know exactly what the rule in the U.S. is, but knowing how gold reserve reports through the IMF have been falsified, I would have no trust in any gold import data that the United States was running.
Yeah. It's an interesting theory because I'm trying to figure out, it's got to show up somewhere at some point. Like when you're moving tons and maybe thousands of tons of gold, the U.S. holds 8,000 tons?
8,133 is the nominal claim.
Exactly. So you got to move a lot of gold all of a sudden. I think that would make headwinds or headlines somewhere, even if the airport staff, Virgin Atlantic crew might talk, people will talk.
Well, a few weeks ago, the Bank of England had to publicly explain the delays in moving gold out of the Bank of England. The Bank of England vaults gold for bullion banks, not just official organizations. And the Bank of England said it was having trouble unloading all this gold from its basement that was being delivered because of logistical reasons. Deliveries were behind, and the Bank of England said, well, we just can't get it out of the basement fast enough. Look, for all we know, the U.S. government could be vaulting gold with the Bank of England. We've done that before. During the London Gold Pool in the 1960s, the United States helped operate the London Gold Pool by shipping U.S. gold reserves over to the Bank of England. So there's always a shell game going on with gold. You never know where all of it is at one time, and how much duplication, overcounting of gold reserves there is. But we do know that there are thousands of tons of derivative gold, paper gold, that doesn't exist. And I always have wondered if the Secretary of State would take the British ambassador to Fort Knox on Monday and say, hey, look at your gold. And on Tuesday, he'd bring the French ambassador and show him the same gold and say, look at your gold. And then the German ambassador on Wednesday and so forth. The actual physical metal long has been oversubscribed.
Yeah. It's interesting. It's such an interesting topic of debate, of course, right? The gold side. What are some of the angles that we haven't explored yet for gold? Like what else is keeping you busy? What are you following closely?
Well, I'm following closely the talk of revaluation of gold. Of course, gold owners love to hear talk about revaluation of gold. Andrew Maguire, who's the London metals trader for Kinesis Money's Live from the Vault program, several times has shown gold price charts suggesting that gold revaluation is already underway, that gold has been rising in the last year in what Maguire calls a stair-step pattern. It goes up and then hangs at the stair-step for a few weeks, then goes up and hangs at the stair-step for another few weeks. Maguire says the gold revaluation is already underway, and it's very possible this revaluation is being coordinated among all the major central banks, that they're already in on it. The U.S. economists Paul Brodsky and Lee Quaintance did really a paper, I think about 12 years ago, saying that us gold bugs should stop complaining about price suppression, that the real central bank game here was to hold the price down long enough so that gold reserves could be distributed among the major central banks, so that all the major governments would be hedged upon the inevitable devaluation of their currencies. Brodsky and Quaintance said at that point central banks would revalue gold much higher, so that whatever they lost in the devaluation of their currencies, they would recover through the upward revaluation of gold. That always struck me as a very plausible outcome. And I think there's certain things that are happening suggesting this is already underway, as Maguire says.
What would be a target range in comes to gold revaluation? I know that's a bit of speculation. If we were to use all the U.S. debt, number floating around is $140,000 an ounce. What is your estimate? What are you looking at?
You pick a number.
Yeah.
I mean, I try to stay away from that because it is all so speculative. Jim Rickards, I think, from time to time has gone back to make calculations on the basis of what gold would be if it had say a 25% or 30% cover against the dollar, but it would be many thousands of dollars above where it is today, however you want to calculate it.
Yeah, you can always come up with a number, absolutely. And again, I like talking about like ripple effects and like what would be the effect of a higher gold price revaluation as well. Let's assume $15,000 or $20,000. What would be the effects that we would feel here?
Well, presumably it would be a currency devaluation, that the government currencies, especially currencies that were not directly tied to gold, would depreciate in the face not just of gold, but in the face of all physical assets. Prices would very possibly rise dramatically. That would be a hell of a problem for ordinary people. If a loaf of bread instead of costing $3 today, it was costing $15 tomorrow, where's that extra money for ordinary people going to come from? I just don't know, but they've got themselves in a real box here by really untethering currencies from gold. I mean, money creation has gone stratospheric. The U.S. National deficit is like $38 trillion, and it went up $1 trillion, I think, just in the last 6 months. Where has that money come from? It's just been typed in. It's been, printed and distributed. There's very likely going to be a dramatic adjustment between money in circulation and hard assets.
That's where it needs to go. That's where it needs to go. Hard assets, real assets. Chris, really appreciate you joining us, as always. Anything else we should be aware of that GATA is doing, any of the policies or anything you're working on?
I would just encourage people to go to our internet site, gata.org, and subscribe to our daily dispatches. No salesman will call. You just get on our mailing list. We try to send out dispatches every day that would be of interest to gold investors, people interested in international economics, international trade. You know, if you find that the dispatches are just clutter in your email box, you can always unsubscribe.
Fantastic. Chris, I got a bonus question for you. I should have asked that earlier. Judy Shelton is proposing a 50-year gold-backed bond. What are your thoughts?
I can't imagine why anybody would trust that. If the United States is short of gold today, and has been fighting gold for a half century, what would make anybody trust the U.S. government that, 50 years from now, it would hand you your gold in exchange for your bond? What government anywhere on the planet would be trusted to turn over gold 50 years in the future? I think you got to have your head examined to think that anybody be persuaded by that.
Perfect. Chris, perfect bonus answer for a bonus question. Really appreciate it. Thanks so much for joining us. It's great to see you in person. I always love doing these at least once a year at the New Orleans Investment Conference. So thanks so much for that. And to everybody else, thank you so much for joining us here. I hope you found this informational. I found this really entertaining and informational, and really appreciate Chris joining us here. Thanks so much for watching. Hit that like and subscribe button. Really curious what your thoughts are, of course, as well. So put them down below in the comments. And yeah, stay tuned for more.